If you have these type of scenarios, when price start to do this retracement to this demand level, this point of interest, you can't execute your trade. These demand level aren't trustable. It's not a good point of interest. It's not a good area of interest, whatever you want to call it. It's not a good point to execute your trade to wait for confirmation. It's not. I will try to explain you why right now. What's up, guys? Edney right here. In today's video, I will help you to fix this. Yeah, exactly what you are watching right now on my screen. I made this draw to try to explain it better to you. It took a lot of time actually. So if you can, please drop your like and subscribe to this channel, right? So when you select your demand zone or even your supply zone, your point of interest in general, and then price just go and sweep it. Price just sweep it and go straight to your stop loss. I will try to explain to you what mistake you are doing, what you're making wrong, and how you can improve this and start to get better point of interest, selecting better point of interest, selecting better demand or even supply zone, right? So let me just try to explain it a little bit better. I'm damn sure sometimes, because it happened to me too when I was starting learning smart money concept and liquidity trading too, you see a clear structure, right? Let's say right here we have this we have break of structure at some point right here. So I will try to make something like this, and then we made this bottom. So right here you have break of structure, then you select this point of interest and it got swept. Or even if price still on a bullish trend, break of structure here, you select your point of interest and then you got swept. Actually, this happened today on US 30. Today is we have the release of CPI, right? Unemployment rate, and guess what? Not CPI, unemployment rate, sorry. Guess what happened? Okay, guess what happened today? If you select this as your point of interest, because right here we don't have break of structure here, but let's say you select this as your point of interest, look what happened. You got swept, right? The stop loss was triggered. But if you had my view, if you had what I will teach you, the knowledge I will teach you right now, you will not say that on the daily time frame, what we have this chalk right here on the daily time frame. Me and my students talking about this chalk when it happened in one of our lessons, and one of my students told me, yeah, we have one chalk on the daily time frame, and probably we will see on the news something very interesting happen, and it will be a good opportunity to start to hold long trades, right? Because probably we can still go up till some level, or if this one, or even this one, we have a lot of level that price can tap and react. I don't trust on these two. I'm just looking for this or this to a huge swing trade, short swing, right? Short swing trade. But we have this chalk. And right here, we have what? We have this demand level that price tap. On the 15 minutes, it will be more easy for you to saw it. Look, all this liquidity. Look what price left behind right here. This huge zone right here with imbalance on it. Yesterday, I recorded a video about imbalance. If you watch this video, you understand why this zone is so important. Where price reacted, look exactly at this zone. You may are asking right now, did you catch this trade? Did you have 190 trigger? No, I didn't catch this trade because I wasn't at the chart when it happened. But some of my students catch exactly this trade right here. Look, we have chalk right here. One of my students catch exactly this trade. I didn't trade today actually. I didn't took any single trade today. And that's why I'm not recording any video. My series 1 million journey, right? That's why. But if you look right here, you can see stop loss right here and this huge trade till this stop. We have this clear smart money trap, right? So it was 1 to 30, 1 to 40 if you want to say, but normally I just take 1 to 10 and I'm out of the market. Let me show to you how you can avoid be trapped by the institutional traders, by the market. It's very simple, actually, very, very simple. Teach you very quick. First of all, you need to understand what is a fair value gap or imbalance. If you don't know what's fair value gap, what's imbalance, go to my YouTube channel. You found this video there, 15 minutes video, very clear, very straight to the point, and you understand very quickly, and then you come to this video. But before you go, just subscribe to the channel, make sure you are subscribed, and drop your like in this video too. Right? When you're trading, if you have range, right? If you have structure and range, for me, it's same thing. You need to see if this range was mitigated. So if you have this range right here, this push to the upside, small retracement, and another push to the upside, let me draw it a little bit better and a little bit more clear, if you have this type of scenarios, when price start to do this retracement to this demand level, this point of interest, you can't execute your trade. This demand level aren't trustable. It's not a good point of interest. It's not a good area of interest, whatever you want to call it. It's not a good point to execute your trade to wait for confirmation. It's not, because I will try to explain you why right now. When you have this small type of retracement of the first range, first market structure, you will probably still have liquidity below this low right here, right? Because we have low, high, low and low, low and high. You still have liquidity in this area, internal range liquidity still in all this area right here. That's why this point of interest, it's not trustable. So this is not trustable. It's not, you can't trust in this point of interest. It's not a good point of interest to execute your trade, to wait for confirmation. Doesn't matter what you are trying to do. It's not a good point. If this happened, if this was what happened, let's say this price retrace made a huge retracement, at least below to the 50%, and actually 50% isn't, if you have some retracement to below 50%, but something like this or like this, it's not good. You need to go deep, right? Deep below 50%. Now this point of interest right here, it's a good point of interest, right? But if you have this point of interest in the middle of the previous range, all this internal market, internal range liquidity still there for the institutional traders catch. They want your stop loss. That's why they made this huge pool of liquidity and leave a beautiful and juicy demand zone to you. It's a trap. Don't trade from it. Don't trade. Simple. Don't trade from it. It's a trap, right? So it's happened all the time. That's why actually I have one post on my Instagram breaking down all type of SMT, smart money trap, right? I have one post on my Instagram breaking down all type of SMT, but right now I will not try to find it. But if you go to my Instagram, it's an old post, but we find there because I didn't delete it, right? It's there. So this is one of the most common mistakes smart money traders are doing right now. This is not a good point of interest to trade, right? So how do you fix this? You need to wait just for this the price catch again the internal range liquidity. So you will have what? You will have some point of interest below this one. This is just liquidity, right? Leaving us with what? Let me just delete this one and draw another one. This is what you should be looking for. This type of scheme. Break of structure, price didn't took all, price didn't took all the internal range liquidity and break structure again, don't trust on the first point of interest. It's a smart money or supply and demand trading trap. It's a trap just to catch your stop, just to do stop hunt. And then you will have the best of the best point of interest, in this case a demand level to trade from. This is the best stuff you can do when you find this type of scheme. If the previous range wasn't mitigated enough, in the next one probably the demand level isn't trustable, right? So for this type of scheme, this is what you should be waiting for. Let me just go to my chart and try to find something, because I take actually a lot of trades with this view. I will try to explain for you guys, and I will try to show for you guys some of them. Look, right here we have one example, one clear example. What you have right here, we have break of structure again, right? But the bottom was right here, the low, right? We have break of structure here. Look, we didn't make enough. This retracement wasn't enough. It tap on 50%, come a little bit below, but I already told you guys that if it just go a little bit, it isn't enough. They need to go deep below 50%, right? Break structure again, and then guess what happened? If you try to go long right here, on the long term, you will get swept, right? You will get stopped straight. This is 15 minutes time frame. I just try to go long here because right here on the 1 minute time frame, you have the seasonal order block too. That's why. But then, as you can see, right here, price respect this demand level and then go up again, right? But I think you guys already understand what I'm trying to explain for you all. And if you're still on the video till now, please drop a like and subscribe, right? Another thing I need to warn you guys is that I will launch my first mentorship very soon. If you want to be able to become one of my students, just join the Telegram group. The link is in the description of this video. See you guys. Stay well. Bye.